Thanks for joining us today on Retiring Well. I think we can all agree we want to keep taxes to a minimum, so we're going to be talking about some mid-year tax planning ideas. And what is phased retirement? That's something that you'll want to be paying attention to. And what are REITs, these real estate investment trusts? Maybe a way to invest in real estate without having all the time commitment. And lastly, a retirement planning guide. So important to be thinking ahead for your overall retirement plan. So all of this and a whole lot more coming up right here, right now on Retiring Well.
Retiring Well, brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well, plan to retire well.
Let's talk about some mid-year tax planning. I think we can all agree that nobody wants to pay more in taxes than they really should be. That's going to go for individuals and businesses alike. And so a lot of times people are focusing their attention on how to reduce those taxes. And looking at taxes midway through the year can be a vital thing, especially if there's been some life changes, maybe financial events or different things that have occurred overall in your income or different investments that would cause a reason to say, wait, I should double check what's going on for taxes. So the first thing, let's begin with your goals. It's important to not only be looking at maybe your short-term goals, mid-term goals, and then as well as long-term goals. A lot of times this is where we would bring up how there's maybe a difference between, say, a tax preparer versus a tax planner. Tax preparer is always going to be looking at, hey, how can I keep your taxes to a minimum in this year, which is important. You want to keep taxes as low as possible, but what decision are you making today that could maybe have an impact 5, 10, 20, 30 years down the road? So that's where, traditional IRA versus Roth IRA, Roth conversions, tax bracket optimization, things like that should be discussed as you're building a long-term plan. Along with that is then, meet and discuss with whoever you are working with as far as tax planning. We've learned over time that some people in the financial advisor community aren't allowed to talk about taxes. We feel that at Centennial Wealth Advisory, it's a vital piece of your overall plan and goes hand in hand with a number of areas that you want to be considering. Some of the things that you'd want to be thinking about is life events such as, say, let's assume you sold a rental property. Well, there's going to be some capital gains issues you want to be thinking about. What if you're getting married? Okay, that's going to change your tax bracket. Or what if, unfortunately, you lost a spouse? Now that's going to change going ahead into the next year. So there might be some things to consider there, maybe even selling a business. Third is going to be assess and estimate. You want to consider all your different sources of income, maybe any changes that you had from the previous year, and you may want to adjust some of those estimated payments that you're doing, or maybe it's changing up the withholding on your paycheck. If you're a small business owner, you want to be reassessing that taxation on a regular basis. Number 4, consider RMDs, or required minimum distribution. So the Secure Act 2.0 changed that required minimum distribution age to age 73. So you're going to want to be looking at, with IRAs and 401ks and the like, how much you're going to be required to withdraw. That could all of a sudden push you into a higher tax bracket. So what are some things that you should be considering today versus just continuing to kick the can down the road? Along with that additional income could then bump up your Social Security taxation and could be as high as then 85% of your Social Security becomes taxable. Another area here that you may or may not have heard of are qualified charitable distributions, or QCDs. So after age 70 and a half, you technically can distribute money from your IRA and have it go directly to a church or charity, and would then be a straight non-taxable event if done properly. So that's something to consider. Minimize and maximize. So consider the timing of certain expenses or income. So example may be, you want to buy that condo in Florida. Well, I want to pay cash for that, but all your money's in IRA. Well, that's going to create a sizable taxable event. So it may be something you want to take money out over time to pay for that. Or maybe you're selling a rental or investment property. Again, you want to plan ahead, not just take action and not consider the consequences. The big thing, lastly, I'll say is stay organized. You want to review previous year's tax returns, learn from that, improve. Are you doing different planning, preparation to look ahead for the long term? So here at Centennial Wealth Advisory, we offer our clients the ability to have both tax preparation and tax planning as part of the overall retirement plan. So if that's something that you haven't thought through yet or looked at that long-term tax plan, we encourage you to give us a call here at Centennial Wealth Advisory and help you plan to retire well.
As you are planning for retirement, where's your journey taking you? Do you know where you are going? How are you going to get there? And what's the best route to take? Do you have a personal retirement roadmap? At Centennial Wealth Advisory, we specialize in retirement planning, and we have designed a complimentary retirement roadmap video series that can be customized based on your personal circumstance and preferences. There is no cost and no obligation. Simply go to cen-wealth.com/roadmap and provide us with some basic information that will guide you to your on-demand, customized retirement roadmap video. Planning is the first step to succeeding. Plan to retire well. If you like watching Retiring Well, make sure to go to youtube.com/retiringwell and click the subscribe button to never miss any of our TV shows and other informative videos.
Your grandchildren are precious to you. They are your life. This is your time to have that special relationship. Taking care of yourself is taking care of them. Centennial Wealth Advisory is offering a free, no-obligation retirement review to make sure you don't run out of money during your retirement. Centennial Wealth Advisory. Your best is yet to come.
At Centennial Wealth Advisory, we take a holistic approach to your retirement planning. So it's not just looking at what your investments are, but what is that long-term income plan for the next 30, 40 years of your retirement? What about taxes and what role they play in your retirement plan? Estate planning, what about life insurance, health insurance planning, all key areas to consider when looking at your retirement. So please visit our website or call the number on the screen. We'd love the opportunity to sit down with you for a no-cost, no-obligation visit.
Hey, welcome to this segment on what is phased retirement. This is a newer trend where employees that are nearing retirement start to shift the amount of hours they're working or the amount of responsibility that they're taking on. If you think about this, there's a statistic out there from Transamerica Center for Retirement Studies that say that by 2024, 55% of the workers are going to want to reduce their hours or their responsibilities. How can this be a win-win? Well, recently I had a client come in that had been working for this company for 30 years. I simply said to them, "So what do you do?" And they just looked at me and smiled. And I was like, "Okay, maybe what's your job description?" And then they laughed. You know, they said, "I've been working for this company for 30 years. The amount of experiences and responsibilities that I have are locked in my head." And, you know, that's great from an employer that can trust that kind of employee. But now it becomes a difficult challenge. You know, if that employee is lost, now look at what kind of challenges the business might have. So what they started to do was this phased retirement, where the responsibility of the employee as they prepare for retirement is to start passing on those life experiences, those job experiences, the wisdom of evaluated experiences onto the next generation of workforce. How has that been beneficial for the employee? They love it. Okay, they love it because their hours are changed now. They don't have to be in the grind. They're looked at for a ton of wisdom, and they still have some responsibilities, but it's different. It's teaching, it's coaching, it's growing those leaders in the company. And so they have great purpose. They have extra time on their hands. It's not a 40-hour job anymore. They have better vacation that they can then utilize, where they went to their employer and they said, I really like going to the UP for 2 weeks in the middle of the summer. I really like going south in the winter for a couple months to get warm. I really like what I'm doing with your company. And they had mapped out what this ideal retirement or phased retirement would look like. And then after they got that ideal retirement, they went and they had that conversation with their employer. Now, let's look at the employer standpoint. From the employer standpoint, that could be the most strategic thing that you do is start that succession plan. Start preparing and growing that next generation of workforce that is going to help your company succeed. When the conversation was relayed that the employee to the employer, there's some nervousness with that phone call, but their big ask was welcomed. The employer was very appreciative that they would have that conversation instead of just putting their 2 weeks and leaving them high and dry. They said, no, I have loved this job, I've loved this career, and I want to leave you in an awesome position. But there's a lot of stuff that's going on in my head that I need to, have some time to teach so that it can be a smooth transition. And their plan is to do this for a couple years, and then they're going to fully retire. But I know the employer welcomed the ideas. And so if you're sitting there and you're like, okay, Jack, that's great, cool, good story. How does that apply to me? Okay, anytime you have to make big decisions or big asks or anything like that, I learned a little equation, okay? If you change your place and you change your pace, you can change your perspective. So if I have to make a big decision, I go find a very quiet place that when I look up, it is nothing but God's beauty. And then I can just think deeply, and I can think long terms, and I can have conversations, and I can start to get a divine download on what that decision might be. And so once you start with ideal and you just really map out ideal, I suggest forget reality for a while, just see what is your ideal. And then you start figuring out, okay, how do we strategize to take our reality to our ideal? So if you're sitting there and you're wondering about what a phased retirement might look like, or if you have any questions and you'd like our advice, we do this all the time. We love to help people. So feel free to reach out to us at any time here at Centennial Wealth Advisory.
Living life isn't always easy. It puts up challenges and obstacles you'll have to overcome. There are responsibilities. You put in effort to provide and take care of your family, to save and invest, to balance work and life. Planning is the first step to succeeding. Plan to retire well.
What can Retirement Analyzer do for you? Retirement Analyzer is a software tool that can help you prepare today for your financial future. You've worked hard to save for your retirement, but as you near your retirement, you may have concerns. Have I positioned my retirement savings wisely? Have I saved enough for retirement, and will my savings last throughout my lifetime? What impact could inflation have on my future expenses? What if I suffer a long-term illness? Will I have enough money to cover my medical care expenses and still be able to meet my other financial obligations? Could changes in the income tax rates disrupt my retirement strategy? There's no need to be in the dark as you prepare for your retirement. Retirement Analyzer can help you find answers to all these questions and more. The first step is providing us with information on your financial assets, the type and current value of those assets, as well as your sources of income. Then, we work with you to identify your expected expenses in retirement. This will include a discussion of the lifestyle you envision in retirement, travel, a summer residence, whatever you dream your retirement will be. We'll input the information you provide us into the Retirement Analyzer, and in a very short time, we'll have reports that show us the percentage of assets currently in high-risk vehicles, as well as the percent in lower-risk products. Retirement Analyzer enables us to project your income from year to year in your retirement and see how long your retirement savings may last. As we change the conditions of the report, delaying your retirement date, including costs for long-term care, adjusting the expected tax rate, or adjusting your retirement strategies, we can see how changes in these variables may impact your income in retirement and the longevity of your retirement savings. Let the Retirement Analyzer help you test drive your retirement strategy today, because the time to discover the bumps in the road is not once your trip through retirement has begun. Contact our office today to schedule an appointment for your Retirement Analyzer review.
All right, a quick little educational break here to talk about what is a REIT. So usually you'll see it as capital R, capital E, capital I, capital T. Real Estate Investment Trust. So that's typically when you see that acronym, that's what it's going to mean. So these here are going to come up in different forms, and we'll talk through these today. But the first thing to know is that basically it's a way for investors to pool money together, and typically then those funds are managed and real estate is purchased and you're a fractional owner in that real estate. So what real estate can be purchased? Well, just about anything, but commonly, you'll see office buildings, retail structures, cell phone towers even, industrial space, maybe even self-storage or storage sort of units. So again, you can see it in a lot of different forms, and then they have to disclose what they're going to be doing and investing in that in. So it's a way, again, for you as an investor to potentially, instead of owning and managing real estate directly, to be partially involved in that and potentially see some dividends come off of that and maybe some appreciation over the years. There are three main types of REITs that are out there. One, equity REITs. So this is typically the real estate investment trust itself that's holding the physical property and managing it and taking care of it. So that the equity that you have, you're physically a fractional owner in that real estate invest. Then there is basically a mortgage REIT. Well, simply stated, they're holding the debt on that property. They're not physically holding the property, the real estate itself, they're holding the debt. And then the third one is hybrid. Well, they're holding potentially both or a portion of both of that on there. So usually when you start to hear about REITs, real estate's doing well, right? That's oftentimes stuff gets a spotlight when it's doing well. Real estate may be hot, so you may be hearing more about it. When real estate is poor, think back to 2008 when there was challenges with that and challenges with financing real estate and all that, tends to be then things look maybe not so favorably on that during those times. Again, just like the market, right? When it's doing really well, it tends to get a lot of attention. When it's doing poorly, it gets the wrong type of attention. So is a real estate investment trust appropriate for you? Depends. How does it fit in your plan is the most important part. Remember, goals, strategies, and tools. We talk about this often here on the show. Real estate investment trust is a tool to try to help you work through your strategies to meet your goals. So again, is it appropriate for you? Depends. Depends on what your goals are, depends on what your risk tolerance is, and how does that fit in your portfolio. So if it's something you would like to learn more and see if it's something that you should consider, let us know. There's different ways to approach that and be able to be invested in that. Or if you have one and you don't understand it, let us know. We'd help walk you through that so you can have a better understanding, so you can feel more confident with your investments.
So I'm Candace Hamill, Executive Director of the Father Fred Foundation. The foundation has been here since 1989, founded by Father Fred himself after he left the state hospital. When those doors closed, he was worried about the community's needs when all of those patients who left. So since 1989, when our doors opened here, he's been providing food, emergency financial assistance, and clothing and household items for families and individuals in need, all of the essential needs. What's really unique about our foundation is that we're 100% funded by community donations. We don't accept state grants, anything like that, so we can help those families that fall through the cracks. We're real excited this year about our back to school shoe program. We've been doing this for several years, but it was just in the last few years that we've actually taken it on the road to hit all 5 of our counties that we serve. So we're able to serve a whole lot more children to get ready to go back to school. These new shoes, they're very high quality. You know, we make sure they fit those kids' feet so they're comfortable and confident, and you know, they're alongside their peers with other new back to school items, and that they're ready to start the school year. We also have our Vision to Learn partners here with us. They're here donating all of their time, making sure kids' eyes are ready to go to school, and if in fact they do need prescription glasses, then Father Fred will cover that cost as well. It's a back to school shoe event. So what we do is we provide every child from if they're walking all the way up to their 12th grade of school, we provide new school shoes for back to school shoes. That includes socks, we provide school supplies. Of course, I mentioned earlier the vision screenings to make sure that kids are ready to go back to school. The whole idea about getting on the road to the other counties is a lot of our families are so rural and transportation is a significant barrier. So we want to make sure that those kids are served as well. And then finally, we can't do it without the volunteers. We've had such an amazing turnout of organization teams coming and just hammering it out with these kids, and super great energy. It's a little bit crazy around here sometimes, but it's a good kind of crazy.
As you are planning for retirement, where's your journey taking you? Do you know where you are going? How are you going to get there? And what's the best route to take? Do you have a personal retirement roadmap? At Centennial Wealth Advisory, we specialize in retirement planning, and we have designed a complimentary retirement roadmap video series that can be customized based on your personal circumstance and preferences. There is no cost and no obligation. Simply go to cen-wealth.com/roadmap and provide us with some basic information that will guide you to your on-demand, customized retirement roadmap video. Planning is the first step to succeeding. Plan to retire well.
There's so many different things that go into retirement, so many different variables that you need to think about: taxes, investments, health insurance, and so forth. So that's why here at Centennial Wealth, we are firm believers in having a solid plan in place that you can lean on and count on for retirement. And so by my count, there's about 10 different basic principles to solidify that retirement plan. So the first one is just start saving, and start saving early, okay? Pay yourself first. Make sure that, if you're contributing to that 401k, you're taking advantage of that full 401k match. I have some clients out there, they'd come in and say, oh, I'm only doing 4%, but my employer's matching up to 6%. Well, why not take advantage of that, right? Make sure that you're putting all the money that you can away for retirement. And within that 401k, you're allowed, if you're age 50 or over, to contribute up to $30,000 for 2023. Another option is to save a little bit more money. If you have the ability to, max out that 401k, but then also add on an IRA. Okay, that's just going to add more money down the road for your future. So for 2023, the max contribution for an IRA, if you're above the age of 50, is $7,500. So that's just that much more that you can stock away for retirement. And make sure that you're using those tax breaks that you get, okay? So, I mean, for the 401k, if you're contributing $30,000 to that annually, well, that's deferring your income, right? So you're able to show a little bit less income, not pay tax on that income, and then when you retire, potentially you're in a lower tax bracket and you can pay a little bit less on taxes at that point in time. So make sure you're aware of all those different little tax breaks that might be available to you as you're planning for retirement. Another, obviously a big one, is to make sure you're aware of how your money is invested in those various retirement accounts. So what are your goals for retirement, right? How much do you want to have saved, and are your investments invested according to those goals? You know, typically what we like to see is, you know, younger you are, the more aggressive you are with your portfolio because you have time on your side, right? So you can take on a little bit more risk. And then once you get closer to retirement, you're kind of scaling the risk back a little bit, reducing that risk exposure. And then once you're in retirement, well, then you might want to take on even less risk because you now need these funds to live on for income. So make sure that you're paying attention to how you're invested in those different 401ks and IRAs that you have out there. Also, it's a great idea to make sure that you understand what you're paying in fees for these different investment accounts that you have. Oftentimes it's tough to figure out exactly how much you're paying in fees. Here at Centennial Wealth Advisory, we have a great software program where we can get behind the scenes and kind of show you, hey, this is the expense ratio for that mutual fund that you have, and this is what you're paying to have your funds invested with whoever they're invested with, okay? And typically some good brokerage houses are good at saying on the statement, they show the fees right there, so you can do the math and calculate exactly how much your investments are costing you on an annual basis. But that's another thing that you really want to pay attention to. Also, use those financial planning tools that are out there to kind of put in your data and show you, hey, what does the next 20, 30 years look like out in retirement? There's a bunch of great tools out there on the internet that you can plug in your information and see, hey, if I'm contributing $500 a month with a 7% average rate of return for the next 30 years, what does that mean for my retirement? And we also have a great program here at Centennial Wealth where we can help you visualize that. But I think it's very important to get that picture and be able to see what those numbers actually mean 20, 30 years down the road. Also, don't forget to pay attention to Social Security. Make sure that you understand and have a good idea on, okay, what do I get when I turn 62 versus 65 versus 67 and so forth, because that really helps you be able to plan for retirement. And then also, one more thing, don't forget to neglect that estate plan. Make sure that all your assets know where to go when you go. All right, if you don't have a solid retirement plan in place, please don't hesitate to give the number on the screen a call. We'd be happy to help. And don't forget, check us out on YouTube. Just go to youtube.com/retiringwell. Don't forget to like, click, and share that channel. Thanks so much.